Hey Money Guy family, it's your host Brian Preston with Mr. Bo Hansen, back with another episode of Ask the Money Guy.
That's right. You guys have financial questions. We have financial answers right here in the Tesla. Go out to your favorite social, use the hashtag #AskTheMoneyGuy, or you can go to our website, moneyguy.com, and ask a question right there.
It's Brian Preston, the Money Guy.
Today's question actually comes from the website, and it's one we hear all the time, often from clients.
Okay.
And this is the way that it goes. Should I co-sign on a loan for my kids? And then we even get younger folks reach out, because we have a lot of high school and college kids that listen to us now that say, should I ask my parent to co-sign on a loan for me?
Oh man, this one, first I have to tell you, I resemble this question.
Okay.
Graduated college, had my letter, physical letter. It wasn't an email because it wasn't the thing back then, just a physical letter with my offer of income, and I wanted to buy a used car.
Okay.
Went to the bank. The car, I still remember the loan amount was $10,000.
Okay.
Payments were going to be like $140 a month, or maybe $200. It was very reasonable. Bank says no. Need co-signer.
Wow.
Because I had no credit. And,
Okay.
and I was like, and my parents, I think they would have co-signed.
Yeah.
But me, the child, the responsible with money child, said no, we're standing up for our rights. I went and talked to, we took our kicking out for the, essentially denial.
Uh-huh.
I went back to the bank branch and I said, look, if you ever want access to me, I'm starting my job as a public accountant. I'm going to be a CPA. If you ever want to give me a mortgage, if you want me to keep my money with you, you need to give me this loan. I kid you not, Bo, they called back 45 minutes later. They approved me for the loan.
That story is just very, very different than my story. I, similarly to you, at senior year of college, I thought I needed to go buy a new car because I was driving it was an old truck that I'd driven all through college, and I knew I was going into financial planning, so I decided that I needed to go buy something a little snazzier, right? So I went and bought a used car, and I still remember the car cost $18,500, and I didn't have that. And I did not have a job or an offer letter. So when I went to the dealership to go buy this car, all I had was in a W-2 where I worked at Chili's. I was waiting tables, and I was going to go buy an $18,500 car that I needed to borrow money to pay the most for. So I, being the smart guy that I was, asked Dad, hey Dad, will you co-sign on this loan for me? Which he did. Now, it was back then a 9.5% interest rate to be able to borrow this, which is kind of sickening to think about now. But I would not have been able to buy my first car had my father not co-signed on the loan with me.
So let me, because then we're going to answer the question. Do you think it was a good decision for your father to co-sign for you?
I think in my situation, knowing me, knowing my grades, knowing my affinity for making financial decisions, yes. Only because I might not have had an ability to come up with financing otherwise. However, do I tell parents often that they should co-sign, especially on things like automobiles for their children? Most often not.
It is easy to look back with 20/20 vision and spot success and say, I would have invested in that.
Yep.
However, I will tell you, I think your parents made a mistake.
Made a mistake.
And let's talk about this. Let's get to the answer of should you co-sign on a loan? This is a perfectly great way to ruin good credit. And what do I mean by that? First of all, whenever you deal with family or friends and money, you have to go ahead and understand that if you're going to set up a loan with a family or friend, and I've done both, you have to mentally think about it as a gift. And just assuming you're kissing that money goodbye and it's just one mistake that you've made. The problem with co-signing is not only are you essentially making this gift, and I'll get to that in a minute, but this is the gift that keeps on giving. It has a shock and awe surprise element in the fact that, if you make a loan to a family member and then they don't pay you back, you're like, oh shucks, I guess that money's gone.
It is what it is, it's gone.
But you wired yourself, you understood that. Here's the problem with co-signing with a loan is that probably the person that you co-sign the loan with is going to be too embarrassed to tell you that they quit making payments.
I can see
so
that.
What happens is when you need to use your credit next, maybe it's when you renew your insurance, you go put a security deposit on your utility company, or you go buy something.
Right, yeah.
And the lender or the person you're approaching that needed to pull your credit will come back and say, oh, I hate to be the bearer of bad news, but something's wrong with your credit. You're like, what are you talking about? So you will have the shock and awe moment that your credit will be screwed up and you've done absolutely nothing wrong except for rewind your memory back to the moment that you co-signed on that loan. Because here's the other problem. The lender that you're co-signing on this loan is not going to come after the primary person on the loan. Because remember, this person has horrible credit. They needed a co-signer. So there's no money there. The bank knows that. That's why why do you rob banks? Because that's where the money is.
That's right.
Why do you go sue or go after the person that co-signed the loan? That's where the money is. The bank just wants to get their money back.
Right.
So guess what? Your bad decision is going to keep giving you gifts and dividends, and the fact that the bank is coming after you, the co-signer, because you are where the money is.
That's right.
So that's bad. And let's talk about this. Family and friends, the relationships are already hard.
Yep.
Why would you set a booby trap that this is something that's already a difficult task because of human nature and just how we all already are? Mm-hmm. Set a booby trap that when this thing goes bad, it will self-destruct and ruin the relationship, probably and potentially forever.
I don't disagree with that. So what's maybe a better solution than co-signing on a loan for your kids? Maybe help your kids early out, and start building that credit. I think about in my situation, had I opened up maybe a credit card or something like that, very small balance, earlier on in my collegiate career, built up some credit history. Same thing for you. If you would have had credit history, maybe you would have been able to apply for a loan and get it on your own accord without having a parent there. So if you want to be a responsible parent, rather than co-signing on a loan for your kids, help your kids start establishing their own credit and their own level of responsibility early on.
I'll make it even easier.
All right.
I think you ought to go ahead and set a hard and fast rule that co-signing on loans is the same rule, and you treat it the same way as if somebody comes and asks you to move a piano or a refrigerator. It's not good for your back, and it's not good for your bank account, so don't do it. Keep the questions coming. I'm your host, Brian Preston, Mr. Bo Hansen. We're the Money Guy team.